Thank you very much, Mr. Chairman. Professor Allen, you, I believe, invited us to ask you about the monetary policy aspects of the stablecoin. We all understand that a critical part of our economy is the ability of the Federal Reserve to control the money supply. So could you comment in whatever detail is appropriate about the impact of these stablecoins on monetary policy?
Thank you for the question, Senator. If you're dealing with a situation where there's high inflation, or if you're dealing with a situation with deflation, the central bank needs the ability to match the amount of money in the system to the needs of the economy. That's how monetary policy is carried out. If, however, the central bank loses control over some of the monetary supply, they lose their ability to put their hands on those levers. So this is something that central banks are extremely concerned about. And in fact, that is the impetus for a lot of interest in central bank digital currencies. Interestingly, the same central banks that are worried about these issues are also worried about the financial stability issues that come with the introduction of a central bank digital currency, not to mention the privacy issues. So it's an interesting question that they feel the need to compete with stablecoins. Perhaps more interventionist policy is justified.
Well, thank you very much. And one other aspect is that this is a novel, or at least a fairly recent phenomenon, and it requires a great deal of thought, analysis, and projecting as to what we should do. And after the crisis in 2008, 2009, we created the Office of Financial Research. Professor Allen, do you see a role for the Office of Financial Research here in terms of analyzing, structuring, and making recommendations to Congress with respect to these stable coins?
Thank you, Senator. I very much do see a role for the Office of Financial Research here. The Office of Financial Research, as you know, was created to respond to the data gaps that we saw following the financial crisis of 2008. As finance has become more technologically informed, as finance faces risks from climate change and things like that, we're now needing an interdisciplinary approach to financial regulation that includes computer scientists, data scientists, climate scientists. I think the OFR right now is underutilized and could really be built up with that interdisciplinary expertise, which would give regulators a more informed foundation to engage on issues of stablecoins, amongst other things.
Well, thank you. I concur. Ms. Goldstein, there are data gaps in the cryptocurrency markets. Could you highlight what you think are the most significant data gaps that we would need to have?
Sure. Thank you for the question, Senator Reid. Unlike the stock market, where we can rely on things like the consolidated audit trail, or we know that all the quotes that go through every exchange are going to be reported back to a regulator at the end of the day, we're sort of at the mercy of what the cryptocurrency industry wants to self-report. And so we may get information about particular prices throughout the day or trades, but we may not get quote information. You also will see sort of arbitrage opportunities crop up, right? The price of Bitcoin on one exchange may be different than it is on another exchange. And I don't know that regulators currently have all of the data to truly understand why that might be. And so there's a real sort of I think, potential for Congress to look at, is there a way to make sure that we do have standardized data reporting in a way that we make sure that all the different exchanges are giving regulators all the information they need? And
Ms. Goldstein, I presume that you would have some questions about the existing transparency, auditing, and disclosure requirements that are imposed on these entities. Is that correct?
Yes, Senator, that's correct.
Thank you very much. Senator Brown, Chairman Brown, asked me to recognize Senator Rounds at the conclusion of my questions. Senator Rounds, you are recognized.
Thank you, Mr.